Hi, everybody. Welcome back to Ox Talks. It is Friday, July 5th, 2024. Thank you all for being here. Appreciate you watching the videos and the shows, subscribing to my channel, and most importantly, please share these with your family, friends, loved ones, coworkers, colleagues, anybody who will pay attention to what's happening. I'm recording this video a little bit earlier today. It's my wife's birthday, so we have some plans this evening with the family, but I wanted to come out and share a few things that I saw released today relative to some news I think is very important regarding this economy. And so I'm putting the video up a little bit earlier today. Hope you guys will get a chance to catch it. If not, midday, but maybe this evening when you get back from work. I did notice the roads are a little more open today. I'm here at the office working, gearing up for next week in this trial, but I noticed that I think a lot of people are taking the long weekend. Hopefully you guys, if you are able to take the long weekend, you're enjoying some rest and relaxation with your family and loved ones. Let me start with something I saw come out of, I guess it's AL.com. That's a publication in the state of Alabama. And the title of the article, as just this afternoon, is Major Pizza Chain Reportedly Considering Bankruptcy. It says Bloomberg reported that MOD Pizza, known for its build-your-own custom pizza and salad options, may seek bankruptcy protection as soon as this week. The talks aren't final and those plans could change, it says. It's unclear if the bankruptcy would mean closures of all of the restaurant's existing locations. It says we're working diligently to improve our capital structure and are exploring all options to do so, a MOD Pizza spokesperson said in an emailed statement to the website. So this business was started in Seattle in 2008. MOD Pizza now has locations in 28 states, including Alabama, and that was where I saw this news story today. MOD Pizza sales topped $700 million last year and was once, it says, one of the country's fastest growing restaurant chains. It previously had announced plans to have 1,000 locations by 2024. So previous announcements were that we're growing, we're expanding. MOD Pizza, I pulled up some information on MOD Pizza relative to how many employees it has. And as of right now, the data I see, 540 locations across the United States, some locations in Canada, and it has over 12,000 employees, all right, as who they refer to as part of their squad. So 12,000 potential casualties there, 12,000 potential jobs lost at MOD Pizza. I'll continue to update you as more information gets released on that. Next story that came out today from New York Post. It's talking about the discount retailer Big Lots to shutter stores may go bankrupt amid elevated inflation. And that's how the New York Post today, that's the title of the article. Comment below, do you guys have MOD Pizza in your area? And do you have Big Lots? I know we have Big Lots here in our area in Southern California. It says discount home goods retailer Big Lots revealed it is planning to shutter more stores this year and may be facing permanent closure. The latest major chain to face financial ruin as inflation-battered shoppers pull back on spending. And again, Big Lots, I've been in those stores a couple of times. You know, they're trying to, I believe, aim for, the lower income shoppers. So again, if a store like Big Lots cannot make it, what does that say about the consumer, the lack of strength of the consumer, and the overall financial condition of this economy? It says the Ohio-based company, which has around 1,400 stores nationwide, disclosed dismal financial reports in a June SEC filing and said it plans to close between 35 to 40 stores this year, following the 52 stores closed in 2023. The Big Lots report said, quote, elevated inflation, end quote, has put a damper on customers' buying power, resulting in big losses for the company and substantial doubt about its ability to continue operations. Substantial doubt means that this thing is on its way out. Big Lots is going to be closing. You're going to be hearing about it. They'll be closing other locations. So I pulled up information on Big Lots, and they have roughly, as of this year, remaining about 30,000 employees among those store locations. So again, when you have a closure of that many locations, 30,300 employers right now, employees at Big Lots. The number's down from 32,200 in 2023, 36,200 in 2022, and 37,000 employees in 2021. So they have been gradually pulling back, losing some locations. But between Big Lots and Mod Pizza, you've got 43,000 potential job losses there, just between two businesses, one a restaurant and one a big box store. So very sad. Again, I hearken back all the time to those people that have regular 9-to-5 jobs. You have a boss or an employer. I'm telling you, it's the time to think about having some kind of a side hustle going on, some kind of a source of additional and supplemental revenues for yourselves. If you're not financially secure, if you're relying on every day clocking in, clocking out for a boss, it's something that you really do not have control over to the extent that you think you might. I think that you should be thinking again about that. Just a suggestion: if you can start your own business, anything. Do what you can to get these, let's say, wheels in motion, so to speak, before these job losses reaccelerate throughout this year and into next year. All right. Start talking about jobs. We got the payrolls released today from the Bureau of Labor Statistics. Payrolls out of the Zero Hedge rise 206,000 after huge downward revisions as unemployment rate jumps to a 3-year high. All right. So we had, I'll cover just the specific data, huge revisions to the last 2 months. They always come out with, a strong beat, and they tout it as a strong economy, strong jobs market. And then what they do is a month later, at the third or fourth page of the story, they revise those numbers down. So here's the data. BLS reported that in June, the U.S. added 206,000 jobs above the 190,000 expected. May jobs were revised from 272,000 to 218,000, and April jobs were downwardly revised from 165,000 to 108,000. With these revisions, it says, employment in April and May combined is 111,000 jobs lower than previously reported. So they get the bang for their buck with the initial release. They juice the markets. They continue to fleece the consumers and those that are only reading and watching mainstream media. The article and then they come out again a month later and they do revisions dating back 1 month, 2 months, and they're major downward revisions. Not only is it says, okay, well, it says the numbers were revised much lower. Not only that, but the composition of jobs was once again dismal and followed the same gimmick the BLS used for its strong JOLTS report this week. Listen to this: private sector jobs came in at 136,000, well below the 160,000 expected, and down from a downward revised 193,000. It was 229,000. The gap was filled by what else it says? Other government jobs, government workers, as government payrolls jumped from 25,000 to 70,000. So we have private sector shrinking. The small business owners, the mom and pops, are the lifeblood of this economy, and of the backdrop of the American business and making things here at home. Now what's happening is all you see is an increase in the size of the government and government jobs. It says even Steve Leisman, he's a talking head on CNBC, he says even Steve Leisman admitted that it's all government jobs. Turning to the unemployment rate, very serious here. There was a big surprise because contrary to expectations of a flat unemployment print, the number rose to 4.1%, up from 4% in May, and the highest print since November of 2021. Okay, so we have to go back more than 3 years to see the unemployment rate at 4.1%. Turning to the hourly earnings, it says here too there was a continued slowing, with the average hourly earnings number rising 3.9% year over year, down from 4.1% in May, and in line with the expectations. On a monthly basis, the print also slower to 0.3%, down from 4.4% in May. In June, the number of part-time workers, we always talk about this, these jobs are, people are cobbling together several part-time jobs to make ends meet. These are not full-time jobs being created, guys. In June, the number of part-time workers rose 50,000 to 28.1 million, while full-time workers dropped by 28,000. So the punchline, this means that since June of 2023, the U.S. has added 1.8 million part-time jobs, and it's lost 1.6 million full-time jobs. Let that sink in, okay, as to what is really happening under the hood here, so to speak. Last article I'll share with you kind of builds on this labor market issue and the jobs report. It was out of Axios today, AXIOS, and it dealt with a little different aspect of what this means for the labor market. I thought I would share it with you as well before I sign off for the day. It says the labor market is showing signs of weakness, with employers easing hiring and rising share of jobless Americans. So employers easing hiring and, it says, a rising share of jobless Americans. Why does this matter? The June jobs report offers the clearest sign yet, we just covered that information, that the economy is losing momentum. The broad host of economic data all point to a softening. Seema Shah, Chief Global Strategist at Principal Asset Management, wrote in a note on Friday. Today's report, this person says, adds to that picture. As I shared a couple minutes ago, there was a combined 111,000 fewer jobs in April and May than first estimated. The rise in the jobless rate has been gradual. We talked about the jobless claims a few days ago as well when that information was released. But it says the rise in the jobless claims has been gradual, not the rapid rise seen at the onset of a recession. But once the labor market starts weakening, it says, it tends to keep doing so. With the June data now in hand, the economy is close to triggering the SAM rule, S-A-H-M, created by economist Claudia Sahm. I think it's pronounced Sam. Sahm. I've discussed this on this channel, I think probably 4 or 5 months ago. It says the SAM rule, or SAM rule, which is a long track record of signaling in real time when the economy is in a recession. The rule examines the difference between the current 3-month average of the unemployment rate and the lowest 3-month average over the past year. And it says the difference now stands at 0.4 percentage point, and the traditional SAM rule trigger is a 0.5 percentage point gain difference. So we are very, very close to triggering that. You guys can research that for yourself and see what the implications of what that means. It says Fed chair, and this is why the markets went up today, and also silver and gold had substantial gains today. It says Fed Chair Jerome Powell has repeatedly said, including at last month's press conference, that if the labor market were to weaken unexpectedly, the Fed's prepared to respond, meaning cut interest rates. So that's why the markets were juiced again today, because this bad news is good news, right? The economy is slowing. The job losses are accelerating. The job gains are simply not there. Unemployment rate is up. Average hourly wages are down. But that's bad news, right? But the markets interpret that to mean that the Fed is going to start this rate cutting cycle. And we'll see what happens. If they do, if they we say pivot and start cutting rates, I'll tell you, watch what happens to gold and silver at that time. You have gold sitting at almost $2,400 an ounce right now, silver over $31 an ounce. And look at the Fed hasn't even started to cut rates yet. So anyway, not financial advice, not economic advice, but something to pay attention to. We're almost 15 minutes here today. Again, I'm going to sign off and post this a bit earlier. Thank you all for your comments. Thank you all for your support of the channel. Let's keep growing the community, growing the viewership, the subscriber base. Appreciate each and every one of you. I'll be leaving to get the workout in this afternoon before we have the dinner plans with the family. Getting that hour workout in like I do every single day, 6 days a week. I would suggest that you all do your best to stay physically fit, get the exercise in, get those steps in, watch the calorie intake, and let's just continue as a nation to do our best and do our part to be healthier, stronger, more resilient. All right, with that being said, have a great rest of your afternoon. I should be able to get a video up over the weekend, but I have some things going on with for work for next week. So if it doesn't happen, I will touch base in a few days. Talk to you soon. Bye.